Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:35 p.m. on an extremely windy evening here on the New York, New Jersey waterfront overlooking Statue of Liberty and downtown Manhattan. It is the 24th of February, 2019, approximately 8:35 p.m. This is a Clueless A Trading strategic webinar. Session will be uploaded to the Google YouTube channel for viewing by all members, and anyone out there with the internet connection. Do pass the word around for people who want to understand the realities, not the fake reality, but the realities of the the very precise forecast on markets. Feel free, tell them to go ahead and subscribe to the Clueless A Trading Google YouTube channel. A quick and important reminder, please follow us on Instagram, Clueless A Trading. If you do not have an Instagram, create one. This is, after all, 2019. So create an Instagram and just click follow on Clueless A Trading and tell all your friends, colleagues, family, pets, everybody to follow. We need to, that's primarily for promotional purposes, to spread the word on what we do here at this exclusive service at Clueless A Trading. We are, after all, quite exclusive because we do not advertise. It's all word to mouth, referrals, and other people who find us on social media, including StockTwits, Instagram, Google, YouTube, LinkedIn, Facebook, and such. On that note, let us begin. So, bottom line is, I'm just trying to get my thoughts together. So the first thing we'll do is look at one of the most critical aspects of financial trading and investing. One of the most critical aspects of financial markets, period. Anything to do with investing. And that is your mental bias, your cognitive bias. And that dictates on of what you're going to do. It doesn't matter how many amazing trades that we have delivered, whether it's Roku that was up 300-400%, Trade Desk that was up more than 1,000% at one point. These are options trades, of course, and it doesn't matter what is delivered, how people are guided. It is their mental amygdala, their brain, their cognitive bias that's going to dictate of how they get into that trade, how they manage that trade, what they think about the markets, how they think about themselves, how they think about life, whether or not how they think about the United States of America, how they think of President Trump and his administration. All these are mixed in a boiling pot, and then they have to decide whether or not they think we are going higher or lower. The technical and the tactical precision charts that are produced and published every single day are very precise and accurate GPS roadmaps so that you can hopefully manage your emotional state, gather the profits, move along, manage your profits, move along, and basically make some money, period. So we're going to look at a chart which I've had for years and years, and I'm sure many of you have seen that, which is the emotional framework of an investor, and this has never changed from day one. I'm talking about from the 1800s. This hasn't changed. So, because the human mind never changes. The human brain is geared for, back from our cave days or wherever we came from, is geared for two things. It's fear, fight or flight. If something is coming, whether it's a mammoth or whether it's an algo HFT program, cell program coming in the middle of the day, if it's starting to come in, you have two choices. Do you fight it or do you flight it? I.e., do you just run from it like a scared sheep and whatever. Whichever the case, you can always strategize what you want to do from a technical perspective, and that's given in all, and that's shown in all the charts. But the reality is that if you are not engaged in the fight and you're always in the mode of flight, i.e., selling or SOA that's sitting on, um, in the bunkers, and as we like to use the term, changing diapers and scared all the time, you're never going to get anywhere. Now, you're all grown people, grown men and women, you have kids, you have families, or maybe maybe you're thinking of starting a family. I'm a family guy. So I don't need to lecture you on the fact that if you're always in a mode of flight, then you are certainly not going to go anywhere in life or in trading, period. And your children are going to learn the same, to always be scared of what is coming along the way. So saying all that, this was back in November of 2013. This was way before I even started my service. My service was started, not my trading career, but my service, trading subscription service, was started on April 15, tax day, 2014. And at that point, the markets were going higher. November 2013, and I remember April 15, the markets actually hit a low. And since then, it hasn't looked back, believe it or not. So saying all that, I just scribbled some stuff, which is very important. The point of maximum despondency and complete depression was the period right before Christmas and right after Christmas, even though the markets took off on December 26, 2018, which was not too long ago. So the key is that this was the point of maximum despondency and depression, and the point of what we call the perfect moments to buy. We're engaged in battle. We didn't go that hard. We didn't know what the markets would come up to this level. We have huge, I'll cover that in a few minutes. We have huge news, which was coming. The market kind of already knew that, but now it's there, that we're going to delay the extra tariffs. We're not going to go from 10% to 25% on the Chinese. President Trump and his trade administration is doing an amazing job. In my opinion, I've said that for a long time, in between some hiccups on dealing with the Chinese trade issue, on the IP intellectual patent issues, and all that such. And President Trump has been and is now going to be in Vietnam, meeting the North Korean leader. He's going to be also inviting, from what we hear, the Chinese premier, Xi. Very powerful guy, very tough guy, very smart guy too, to Mar-a-Lago, the President Trump's estate down there in Florida. All that is happening. And most importantly, what the markets look at now, we don't have extra tariffs. And the way things are going, the warm vibes that's going on, you saw the press conferences in the White House, in the Oval Office on Friday, between Chinese Vice Premier Li Hua, now I got his name right, and Robert Lighthizer, our trade representative, head of the trade team, President Trump sitting there. There's a lot of good vibes going on, and vibes matter when you're negotiating with your economic competition. They're not our enemy. They're our economic competition. Let's get that right, okay? And so there's good things, you guys know that. So let's go back to this behavioral game theory chart, what we call BGT, behavioral game theory, that applies to life, that applies to trading. A lot of people are very strong in what they do in their lives when it comes to U.S. financial markets, and I've known this back from my Wall Street days. The smartest people in the world turn into complete dumb cowards when it comes to financial markets. Why? People ask. I don't know. Maybe because stocks, stocks are something you can really touch or feel. It's something intangible. But I always ask a question. These are American companies. These are real companies. These are real bricks and mortars institutions. These are companies which are delivering and growing America, making America great. Making America great is not just waving a flag and screaming and shouting, right? I've always said that. It's U.S. corporations, U.S. brains, U.S. exceptionalism that makes America great. So these companies are great. So how come they get all so scared? Because when the market goes through a tumble and we have a corrective pullback, and every single talking head out there, as you all know, from Wall Street talking heads to all the demons in your head, and everyone just said, oh my God, it's all over. I've always said, it's not over. I'm a survivor of 9/11. It wasn't over then. When thousands of people and a few friends of mine, close friends, who perished. I left that building 15 minutes before the first plane hit. So what's all over? I don't get it. Anyway, so maybe I'm just weird. I don't get it. So smart people turn really dumb. Smart funds turn really dumb. Smart institutional investors turn really dumb. And retail emotional investors really turn very dumb. It's true. We don't know that the market was going to come up this high, but we guided our members all the way up. And now there's a fair shot of there's a fair shot that within the next couple of months we will test the new highs. Yes. At least chart-wise, that's what it's showing. And we might make a newer high. So, but despite all that, we are still just climbing over the depression phase. And not we. Majority of the retail investors out there, especially the emotional investors, and many of you, many of you also, you're in this phase of hope, a little bit of relief. Yet we have climbed 3,000 plus points on the market. More than 3,000 points. What am I talking? Yeah, a little bit more than 3,000 points on the market. 3,000 Dow points. And we are just simply there. We're getting into that hope relief phase. We're off the depression stage. I know. I can feel that. Like President Trump told the Fed Chairman Powell when he was talking about quantitative tightening and all that stuff which caused the market to fall really hard in December, he said, feel the market. Well, I feel the market. Trust me. Okay. I feel all of you. Feel your mental emotions. Trust me, I know. So we're getting to that. We're a little bit between this stage here, between hope, relief, and optimism is starting to creep in. Guess what? If you look at this particular behavioral game theory chart, here is where optimism begins. It hasn't begun yet. So there is still room for the market from a psychological standpoint to move higher. My technical charts will guide people, as they always have, through good, bad, and fugly markets, what to do. But this is something that you all have to really fix in your head. And I try to fix in my head all the time. Because I always like to say, life is a work in progress. It's not something you master all the time, because so many things are thrown at you despite your best intentions, despite your best efforts. You overcome them slowly but surely, or you overcome them fast with determination. So we're at this phase here where it's optimism. It's at the lower end of optimism, trust me. I can see that with my members. I can see that from the feel of Wall Street, where I come from, my career path, my old life. We are far from excitement. We are far from thrill. I'm talking overall picture. And we are very far from euphoria. So we got 3 more stages or 4 more stages, because optimism is just creeping in. 1, 2, 3. Forget that. That was not November 2013 when I put that out there. And believe me, I was dead right. I put that up there on Stock Twits. And this is the fourth stage. So we call this phase that we are about to embark on wave 5 of Elliott wave theory. I'm not going to get into Elliott wave theory. I'm not a master of that, but I understand it quite well. So we are wave 5 where we are right now. We were wave 5 in January of 2018 where the market just surged. The chat rooms here at Clueless A Trading were full. People were just going like, wow, we're going to go this way. And I said, guys, watch out. I took profits, staggered profits, a little bit early, didn't matter. Because starting January 29th, we collapsed like no one's business. I didn't know we were going to collapse like that. I'll be honest, I'm straightforward. So we're in wave 5 right now. The beginnings of wave 5, or maybe the early part of wave 5. And wave 5 is where things just go ballistic. We've been seeing it in a lot of our stocks. A lot of the earnings plays, a lot of the ones that have been swing trading, a bunch of stocks, and which are just rocketing. Even IPOs that I mentioned to you guys, that it's all in the Twitter feed for you guys to look at. HARP came out at $10, $11. We bought them around 11. I didn't even realize it because I just have some common share just sitting there. Hit 1777. That's 70% plus on an IPO that just came out last month. Harpoon Therapeutics. I'm sorry. Symbol is HARP. I'm sure some of you bought it and just sat on it and you're loving it. No options, nothing. Just shares. $10, $11, 17. About a month. So anyway, so that's where we are. I don't want to get into it too much, but wave 5 is not the final stage, but it is the final stage of where the markets really ramp. This is the stage that can take us towards that. It's certainly going to take us towards that. 2,800 plus level. We're already there. It's going to take us towards the 2,900 level on the S&P 500 and possibly 3,000 plus. And it's not going to happen in one day. It's going to happen over weeks, probably a month or two. But it's going to happen quickly. And people are a lot of stupid mom and pop. Not that mom and pop is stupid. They just are in a world of, oh, markets are looking good. Now I feel okay to get in. They'll all be getting in between this stage right here. It's never changed. Never changed. It's always the same. Like we say, the same old story. Then the excitement will come in and then the markets will go back in the cycle again. This cycle could last a couple of months. It could last a couple of weeks. I don't know yet. There is going to be the first drop. We're going to know it on the charts. Then it's going to try to move up. Try to go back to that euphoria stage. This is the anxiety stage, like, oh, the first drop. Then the denial stage, oh, that's it. Market's going higher. Then the fear stage, when the market basically does that little move on the right shoulder, falls again. And they're like, because they all got in here. They didn't buy here. They didn't buy here. And that applies to many of you too. So then comes the drop, and they're like, oh, this is scary. Then the market drops more, tries to rally. Boom, drops again. Now, this all could happen within weeks after this stage is done. And this stage could very well continue till the end of March. Okay? Till we reach that euphoria stage. My charts will show it. You guys won't know it. You guys will feel it a little bit, but you won't know it. That's the reason why it's so important to be connected with Clueless A Trading. Whether you're an active trader, whether you're not trading, there is absolutely no reason whatsoever, ever. And I've told some members who quit or left, so I'm really not trading much, I'll come back. That's okay. But once you're disconnected from Clueless A Trading and you don't know what's happening on the real-time Twitter feed, you're toast. You have no idea what the reality of what's going on. And it's a fact. So it's worth a couple of extra bucks to be connected there, whether you're trading or not trading, or just if you're in the process of learning on being really connected. Not through CNBC, Not through Fox Financial News, not through Bloomberg, through Clueless Ape Trading. It's true. So, saying all that, then there'll be the panic stage, the capitulation stage. Oh my God, I'm just selling everything. I can't take this anymore. Despondency. Oh, I will never buy a stock. This is so bad. I can't believe this. Complete loss of faith in U.S. companies. And then this cycle will start again. That's it. Okay. Mike, I'm too busy doing this stuff. I can't read your post right now. Sorry. So bottom line is that that's behavioral game theory. And it's always like that. It's always like that. And this is where we are right now. We're not there yet for most people. Okay? We're certainly not here. We're somewhere here. Not we, most of you, or some of you maybe, and most other retail emotional traders out there, and the overall business community. And then this will happen. So we call this Wave 5. It is starting Elliott Wave Theory. EWT. Okay, let's move on. This is done. Now, let's see what's going on the charts. Take a good look at this. Take a very good look at this chart. You guys have computers, you guys have platforms you're trading on, you have charts. Take a look at this. I'll be back in 10 seconds. So the big picture tells us on the daily, and this is the actual E-mini S&P 500 index futures in action right now. Futures are up roughly 8 points. They were up a little bit higher earlier on President Trump declaring no extra tariffs, on declaring that he's looking to meet President Xi of China and all that stuff. I've talked about this many times. This was all predicated. And we are here, right there. So let's zoom in. And by the way, guys, ladies and gentlemen, this is not rocket science. All right, so don't make this overcomplicated in your head. So bottom line is that this is where we are. It's a little red doji, yet futures are up 8, right? Because there was some selling right off the top here. Remember, this is a massive, massive candle sell-off that happened on the 4th of December. Now, I'm repeating myself, but hey, when you're teaching the kids, you got to repeat. So I'm teaching you guys, so I'm repeating. So I've talked about this many times before. So we went here, we went above that, and now we hit to the next level where there was this red doji on the daily is 28.12. So we have a little bit of room to move. Now, from a swing perspective, the number that I'm looking at, it's somewhere around 28.16, 28.20. And I've said this repeatedly. Listen to my old video. Old video meaning for the last one. We're talking about another maybe 100 to 120 points, and we're going to start hitting some major roadblocks. The full pattern completion or semi-full pattern completion comes in around the 28. This where the big supply, the big sell-off came back on the 10th of October, sudden. And that's around 28.90. Yeah, good for 2,900 on the S&P 500. I'm not even looking at that right now. I'm looking at this line to be that major wall that is going to hit the market. And that is roughly about 100 to 120 points higher. Right there. going to see a lot of different news coming out saying, oh, everything is going well, but we have this problem. Boom, the market drops 200 points. But for now, we are moving towards this massive wall here, which is shown in blue. Nothing difficult. I don't want to overcomplicate it. That's what it is. We have the 3450 crossover. We have the 20-day moving average moving nicely higher. We have if somebody want to watch things short term, what's happening on a daily basis, follow this line, which is the 5-day SMA. That's what I use. Some people use the 9-day SMA. Some people use the 8-day SMA. That's up to them. But I use the 5-day SMA, which is basically the weekly one. So right now, as long as we're staying over 2787, we've talked about this repeatedly on the short-term charts for real traders who trade the market, trade the SPY. You know what I'm talking about, 2787. So 2787 is now a support. That's about 13 points below where we are right now. We hit 2800. I've been talking about it for weeks. So 2800, now we are crossing over that in the pre-market on the Globex futures. And if we drop to 2788, that's roughly about 100 points, 100 Dow points below. And if this line starts to turn down like that, then obviously the market is very exhausted and needs a corrective pullback. We get corrective pullbacks almost every couple of days. We got one here on Friday. I'd like to remind everybody, I'm sorry, not on Friday, on Thursday. I told everybody on Thursday, buy here. There's a high probability we're going to reverse hard within 24 to 48 hours. And lo and behold, you guys saw what happened on Friday. So if you're positioned right on Thursday, you made a killing. Doesn't matter if you have a small account, large account, you made a killing. Both on lots of stocks as well as on the SPYs and the Qs and things and the indices. You know it. So I can't be any more accurate, guys. I'm trying to help you guys as much as possible, and you guys really need to help yourselves. Many of you, in my opinion, because I think many of you are just sitting on the sidelines. I don't know what you're waiting for, because the fear is so rampant. It's almost like a cancer that you can't get rid of, even though the cure is directly in front of you. I don't mean in the physical sense. No offense meant to anyone. I'm talking it from a market sense. You have a brain aneurysm, which is really fixable, but you are so shot in your head because every time the market pulls back a little bit, you just don't want to do anything. Yet, those are the perfect buying opportunities. Case in point, Thursday and Friday. Okay. Everything else is looking good here. There's nothing here I can report. We are starting to see a negative divergence here, telling us that the market has a little bit more room to move before it will drop. I'm not talking about the 3,000 point drops. I'm talking about a drop, which would be quite a few hundred points, and it'll happen fast and furious because the histograms are starting to, on the MACD histograms are starting to, you can see that. That's a negative divergence right there. Slower, the stochastics are moving higher, markets are moving higher. At one point, you can't have this negative divergence. It has to adjust. There will be a mean reversion. Don't know these terms? Sign up for the advanced coaching sessions. Do your own homework. Go on Investopedia. Do it. Listen to my old videos and my video casts and my training sessions, some of the free ones, and you will know what mean reversion is all about. Mean reversion away from how fast and furious we're moving away from the moving averages. At one point, we have to mean revert. In the meantime, here's your 200-day moving average, the white line, and I'm starting to see something which is very interesting, which is there's a slight edging up of the 200-day moving average over this line, which is the 150-day moving average. That is extremely positive from a swing trade perspective. I would love to see this. The white line here, the just goes like that. Imagine that. Oh, that means the market's going to go up 3,000 points in a matter of a week. Does it happen? Not really, because these are long-term moving averages, 200, 150, lots of days to take into account on the moving average, right? I'm sure you guys all understand what an average is. So Moving averages are the same way. So bottom line is that it's still flattish, but I am starting to see it edging above this line, the 50-day moving average. Sorry, 150-day moving average. The 50-day moving average is all the way down here. So when you have a crossover, if I can see a detectable crossover, and that is extremely bullish. Can it happen? Absolutely. Let's take a look at the weekly. The weekly charts are very positive, more positive than the daily. That means on a swing perspective, the market has more room to move, even though we might, over the short term, after that 100, 120 point move higher, pull back a little bit. Gives us more buying opportunities on selective stocks. Remember, you always have to be selective. So this is just shooting higher. It's getting certainly very overbought, no question about it. But there's no signs that the K line here is above the 80 mark. You can see that once it goes over the 80 mark, this orange line here, percentage K, then that is going to be that's something when you know you're getting very overbought. So we're still not there. We are at 63. We go over 80. Don't worry about the numbers. Just look at it visually. Visually, once this line crosses over and meets the white line over the 80, that means you're very overbought and you're due for a correction. So far, the MACDs are looking great. They're starting to gain momentum. I talked about this way back, that we're going to go positive. Now we are in the 5th week. 1, 2, 3, 4, 5. Generally, from what I've seen, and this is a week count, just a day count, this is the old-fashioned way of looking at things, you have 8 weeks of a rally. 8 weeks of a rally should take us into the middle of March. Okay, so we're in the 5th week right now. Now, these ones are multi-week rallies, but hey, can happen. These were 1, 2, 3, 4, 5, 6, 7, 8, 11, 12, I don't know, there are 20 weeks in a row. But those generally have very large corrective pullbacks. So I would rather go for an 8-week rally, which is 3 more weeks from here. That's it. Let's take a look at your daily chart. By the way, while I'm talking about all this stuff, Anu, Mike, Trina, think about a few stocks you want to look at. I'd be happy to show them to you guys. And I'm going to and we'll wrap this up because I don't want to keep on repeating the same thing over and over again. All right. Member participation is important, especially if you're looking to make some money. I know most of you haven't made any money that you can really talk about, despite the 3,000 point rally on the Dow and absolutely precise, accurate trade alerts and market alerts that I put through. You guys still have time, so don't sit around. All right, time to go to work. If you don't work, you don't make money. So this is your daily chart here on the E-minis. You can see that it's we're right here. Futures are up 9. This is your weekly chart. This is more easier to see. This is your weekly futures chart, similar to the S&P 500 chart, obviously. And you can see that we have a broad line here where the market hit major walls back on October 15th, November 5th, almost on December 3rd, and that line happens to be 2821. And we're around 2800 right now, right? So remember, one E-mini point is roughly 6 or 7 Dow points, so you're talking about 120 to 140 Dow points higher when we're going to hit a major wall. If you go back, this was the massive fallout back on 2018 on January 29th. This was the euphoric stage, the optimism / excitement, thrill, and euphoria where mom and pop just dove into the market starting on January 1st on the elation that, oh my God, here we go. President Trump is doing a great job and this and that, and no idea about what the heck's going on. You could make a lot of money on this move, but then it just plummeted. Is that a norm? No. 2018 was, as I've said repeatedly, was one of the most volatile years known to financial markets in God knows how long. So are we going to repeat that? I don't think so, but what the heck do I know? All right. So Whatever the case, a full pattern completion looks like this. A child can understand this. This was the band we were following. This was your trading range right there, 25, 26, and somewhere up there in the 29.50. Well, we fell out of that, and there was a massive slew of institutional selling, mom and pop just calling up their mutual funds and their brokers. I don't want to own this stock. I want to get out. This is crazy. This is nuts. It's horrible. Many of you included, because we had 3 weeks of a massive fallout. 1, 2, 3. All ended on Christmas Day. We're closed on Christmas Day, but foreign markets showed it. And December 26th. And this is what's going on. So we were supposed to bounce off the 25, 28 level. That was your range. And there. Right there. So this was an aberration. This should not have happened, but life is not about what happens or not. Life happens, all right? Crappy things in life happen. But in between all that, we managed to eke out some money too. So this was dramatic. So this was the outlier, and now we're back in the range. So if you are back in the range, simplistically speaking, we should be at least hitting the upper end of the range, which is the old highs. Nothing too dramatic, nothing too complicated. So fix your brain to understand these basic things. Now, in the meantime, if you notice, this is also a pattern completion. Right here, we're getting close to it. Right here, if we get there, remember, the markets are going to be moving fast and furious, and every single piece of press announcement, Twitter tweets from President Trump, and other stuff coming out from the global thing. We have the Brexit crap going on in England. Theresa May is trying to cut a deal. Hopefully she manages to do that. That's another risk. Federal Reserve is not a risk. I'll explain that very clearly. President Trump is a risk, because he might say something a little bit like, oh, I didn't like that, dim sum and Beijing duck that I had, in Vietnam. He's like, yeah, I didn't really like that, Vietnamese food, and China's not really cooperating. Next thing you know, boom, market will just go. So we're in that range right now. So this is the first pattern completion. If everything goes smooth, no negative tweets, all that stuff, we're used to that, right? Absolutely. So it's not easy, but believe me. So we got another 100, 150 points, 120 points, like I said, before we hit this stall speed here. In the meantime, full pattern completion is here. One with the other, I think the market will try to get there, but in between, once we hit these levels, we will get some quick, sharp pullbacks, which could be anywhere between 200, 300, 400 to 600 points. That would be your pattern, inverse head and shoulder. Head, left shoulders, these are big left shoulders. Right shoulder, if we fall here, that means we're talking about, you're talking about 1,000 plus points, 2640, 28. Yeah, you're talking about 800 to 1,000 points if we get to this level, and it could certainly happen. And we're going to make money off that. We're going to make money off that. But in the meantime, we have another shoulder here, which we can hit. And these head and shoulders work like magic. They don't exactly give you the timing, like it's okay, short right now, but we'll be watching the intraday, 15-minute, 1 hour, 4 hour, and daily, not weekly necessarily, daily candles to determine whether or not we're coming in for a quick, swift pullback. But in the meantime, we're getting close. Okay? That's it. So this chart, very easy to understand. Each of these lines are drawn at point of maximum supply, i.e. sell programs, and maximum demand, i.e. buy programs. Okay? If somebody doesn't understand basic candlesticks, they need to really brush up. I can't teach you that. I have some quick videos on candlesticks and stuff. Go on Google, go on YouTube. There are guys out there with 1 million+ viewers who are explaining to you candlesticks. You got to understand it. Got to understand it. Very simple. red is bad, green is good. Okay, how about that? But it's the dynamics that happen between is what makes you the money. All right, let's move back a little bit. This is your monthly. The monthly chart is extremely bullish for a simple reason. The internals are still poking higher. Once you cross over the 877, 80 mark right here on the stochastics, all right, that's when you start getting overbought. When you get overbought in this zone, you can either move sideways a bit and have a multi-month rally. Remember, this is monthly. A multi-month doesn't mean we're not going to have 200 point pullback during the day, right? Come on, let's not be stupid about that. But this is what a multi-month rally looks like. You guys have been there, yet you haven't taken advantage of it. We have had many, many multi-month rallies, and then you have these quick 2-5-month pullbacks. This is going back to 2009. If you remember yourself on 2009, maybe you didn't were in the market in 2009. Maybe you didn't understand the markets like you do right now thanks to Clueless Trading. Okay, seriously, maybe you just said, "Oh my God, look at that!" Now it's not just look at that. Now you understand the dynamics of what's happening underneath the market. So this was as recently as 2017, 2018, right? There's multi-month rallies. So I'm not even pulling that because this was up and down 2018, straight up, straight down. So at this point, upper end of the Bollinger is basically the old highs in the mid to 2900. And if we break out over that, I'm not even going there at this point, then we're going to go to 3400, a lot higher, thousands of point higher. The Dow is going to hit 30,000. Yes. All right. The Dow is going to hit 30,000. We are at 2,800. If we go to 3,800, because that's what the charts are showing at least from a technical perspective, over many, many months, we could land up 3,400 this year. There. Okay. We are at this point, we have crossed into, and this is really critical, really critical. So please try to focus a little bit. We are now above. We are within this big acceleration channel that started in February of 2016. February of 2016, ladies and gentlemen, right here. This channel is what I'm talking about. There. We are inside that channel. There are lots of little big fat resistance, not little, big resistances. New highs is a resistance, this and that. But over multi-month, we could hit 3,400. If we hit 3,400, then you're talking about stocks going ballistic. You're talking about Boeing at $500+. You're talking about Caterpillar going back to where it should be, $200. John Deere at 200+. All right? So, bottom line is, people say, "Oh, this guy's crazy," and he talks like this. Guys, these American companies making crap loads of money in the midst of a massive trade war. You all believe in America. You all are patriots. Are like, "Oh, let me wave my flag. Let me go running around." Yet you don't want to buy an American company that's producing the bread and butter for American GDP, gross domestic product. What kind of patriot are you? Seriously, think about it. Stop BSing yourself that you believe in America when you won't even buy these stellar American great companies. The Boeings, the Deeres, the United Technologies, the Enron Oil and Gas, and these big, big companies. But you want to say that you're a patriot. Okay, great. Talk about being a hypocrite. So anyway, the bottom line is that if that happens, then that's 600 points. From where we are right now to the upper end of the channel, 600 points. And I'm just going to say on the S&P, even though they're the E-minis, the futures, same. Okay, 600 times 7 or 8, so you're talking about 4,800 points on the Dow Jones. This is more of a longer-term view, obviously. Dow Jones. We are right now at 26,031. Let's call it 26,000 on the Dow Jones as of Friday. Add 4,800. Oh, what am I doing wrong here? Sorry. I did it wrong. Hold on. So this from here to here is 600. That equals to roughly around 4,800. Let's call it 6, 7. Yeah, like let's call it 4,500 Dow Jones points. This is 600 S&P points. We're at 26,000. Oops. Okay. So basically you're talking 30,500. So Dow Jones can be 30,500. You've heard it here first. If things move along despite volatility, despite everything, and our great company really pushing ahead, and you guys finally growing up to be real traders and investors, Dow Jones 30,000 plus this year in 2019. It is possible. And technically, that's what it's showing. Now, do you want to always be in a state of fear and flight, or do you want to be in fight mode and not in flight mode? Ask yourself that question, which I explained earlier on. Because technically speaking, we have entered this acceleration zone that started in early February of 2016. And if that's the case, and of course we're going to slip and slide. If we completely slip out of this channel, then we're going to hit the new, close to the new lows again. That's a given. But given where we are right now, we have entered that acceleration channel. We can zigzag our way thousands of points like that and hit that level. That's it. What more could I help you guys with? Stocks. All right. Throw me a stock. Anu. I don't know what you've been doing, but I think you're doing okay. You come in the chat room, you smile. I see you smiling. So what's the story? Go ahead. Tell me. I mean, hopefully you're trading it a little bit and making some.
Yeah, a little bit. Yeah.
Yeah, well, speed up a little bit. I mean, what more could people, it's markets moving higher. Markets have been moving higher till December. Everything that I talked about earlier, I'm not talking about you, Anu, I'm just saying in general. You are seeing what's happening with the market, but what's holding you back is your constant fear that you're going to lose money. So how long will you be doing that? Till the market reaches Dow Jones 30,000? I mean, I'm not a psychologist, I'm not going to, I can't sit you down, So how long will you be scared? Have you ever asked yourself that question? We are technically in a major breakout mode. So, you know what the stocks have given, what they're doing, right? They're just going through the roof, most of them. Almost all of them. You see that, right? Every day. So why aren't you trading a little bit to make some little bit of money to gain confidence? Just asking.
No, I thought I will start slow and then learn and then
That's
go to the next.
That's a perfect strategy. That's a perfect strategy. But don't start that slow that the markets reach those levels and then the markets are going to crash in a few months. So my question is, don't be that slow that you don't make enough money to make yourself smile. What difference does it make if you... No, don't listen to me. I'm not your father, okay? So don't say okay like that to me. Don't take me the wrong way, okay? I'm somebody who's a coach. Can you... Okay, let me ask you a question and answer me truthfully because you are passionate. I know that. If you lose $400, will that kill you?
Yes.
$400 will kill you. Okay, then that's a problem. Well, what if you lose $200? Will that kill you?
It's not killing or anything. It's like I lose my confidence. So
Okay.
I don't know. I do that every day. If I gain something, I will
Okay.
that
So,
will.
so in your case, let's put it this way. Play with smaller amounts, buy something at 60 cents, play with $60 and let that, like Spice, for example, the SPY, and you see how it jumps quickly, right? 80 cents, a dollar, $1.20. Take a little bit of profit along the way. So if 20, 30, $40 gains your confidence, that's good. Just do it that way. And I think that's how you're doing it, correct?
Yeah, sometimes I do like that. Sometimes like yeah, I
Oh,
like I some days I lose 500, $600 also. So
if you're losing $600, then that means you are putting at least 1,000, 2,000 in the market. Yes or no?
yeah,
Okay. So you need to basically try to understand, I don't know, understand one thing. You need to really sign up for the advanced coaching session. And I'll tell you why. Not because it's going to make me richer. It's going to make you, in my opinion, richer. Because you will really understand how these charts work. I spend enough time on this thing, as you know, even tonight, explaining to you like what is going on. When you look at this chart, does it look like it's going to crash? Tell me the truth.
I think it's going up.
It's been going up since December. It's been going
Okay.
up since December 26th. You're not living under a rock that you don't know. You see that, right? It's been going up. We have had 1 week that we have had a down week. See the red?
Yeah.
Yeah. So it's not what is being delivered. It's what you are doing. So think about it. Sign up for those
Yeah.
ACS sessions. It's going to build your confidence because you'll understand how the mechanics work. This is not rocket science. That's all. So any stock
Okay.
that you want to look at that I can help you with.
What do you think about the Roku stock?
Roku just went nuts, right? Were you in Roku?
No, not now.
I didn't ask you not now. Were you in Roku? Did you buy Roku
Yes.
and you made some money on
Yes.
Roku?
Yeah, a little bit. Yeah.
Fine. You made some money, right? You didn't lose money on Roku.
No.
Okay, so Roku stock over a period, as in like looking out, not like 1 day, 2 day, is going higher. Roku, in my opinion, is going to go back to 75. This is the
Okay.
most powerful. When you get a candle that big, that means the big boys, they looked at the numbers on the earnings and they said, oh my God, we gotta buy this baby. They were maybe not here. We were here all the way. Here and, not like all the way every day, but we were mostly here. You know that. I've been pushing Roku for a bit, right? But after the
Mm.
earnings came out and this happened, when you get a candle that's that big, that's billions and billions and billions of dollars of big mutual fund money, the big boys stepping in. So on a short-term basis, Roku's going to go to at least go here. Don't worry about what happens like every hour or 2 hours. I'm talking in general. And it's and this is very clear as day, that this pattern on Roku is going to be reversed. So if you want to be like not worried about what happens every 10 minutes or 15 minutes, you can buy Roku calls, and I'm going to recommend that tomorrow, into April and May, so you have enough time, right? I mean, you do trade
Yes.
options, right?
Yes.
Okay, so you can buy enough time. When you have time in options, it feels good, right? So it doesn't matter if it's
Yes.
down 1 or 2 days. Yeah, it doesn't feel good, but at least you know you have enough time and the option will not expire worthless. So you can buy it 30 to 60 days higher. I'm sorry, out. And Roku, in my opinion, is going to go back to 75 to $80. And you can see that
Okay.
yourself. I don't need to convince you by looking at the pattern symmetry. Can this happen? That Roku just suddenly, this huge billions of dollars that went in after earnings, just completely, sorry, change this thing here, completely collapse and go back to 50, which is the uptrend line, the blue line, right?
Mm-hmm.
I don't think so. Can it
Okay.
happen? Look, anything can happen in life, right? It could be the
Yes.
Roku CEO decides that he's going to leave the company. Stock could easily drop $10, right?
Yes.
Right. Those
Yeah.
things, yeah. I'm talking from a technical standpoint. Roku short
Yeah.
term wants to go to the 67 level, and once it breaks above that, it's going to revisit its height. It looks like the business is on full swing forward. Apparently, Roku is in most of the new 4K, 5K TVs or whatever coming out, and their business, streaming business, is really taking off. So it's a very bullish stock, and it's a good one that you pointed out. So this is
Okay.
something that you can certainly trade, hold it, buy them a month or two out, and let it go. Now, unless something really dramatically wrong happens with Roku, that's a different story. But if you notice, I've been pushing Roku primarily because of the way the candles are on a weekly, and also look at this green. What does this green suggest to you? All millions of shares. These are millions of shares being bought. That's not you.
Yes.
That's not just you and me. We're like small players in the world of trading, right? It's the big boys, the big mutual funds, hedge funds who were short Roku. You understand being short, right?
Yes.
Yeah, like they were wrong. I bet you there were some hedge funds out there who just went, "Oh my God, I can't take this." Roku was up 20, what? It was up like 20 some percent on Friday. They were like, "Oh my God," they bet against it. I bet you they did. So
Mhm.
so even smart money can be very wrong, Anu. You know what I'm saying? Because they were
Yeah.
probably betting like, "Oh, their numbers are not going to be that good." Nothing. And then they're like, "Oh my God, what's going on?" So what do they have to do? They have to start buying to cover their losses. So that's called short covering. That's called short covering. So yes, very good stock in my opinion, based technically speaking, and of course fundamentally from what they. Now, give me another one because you certainly gave another one that everyone. And by the way, everyone's going to be very helped by a great member, Anu, who is a newer trader playing with small amounts of money, trying to develop her confidence. So I really thank you for that question. So throw me
Yeah.
another stock. Throw,
Thank you for the explanations.
no, absolutely. That's my job.
Yeah.
Where are you
Yeah.
located, by the way?
In North Carolina.
Okay, nice. That's a beautiful part. You know, I have friends out there. That's great.
Okay.
Now, I'll give you another stock that I want everyone to focus on is Square. Now, I've been very excited about Square, even though there was 1 week when the stock was, down from 76 down to 68. Everyone freaked out, and I said, no, buy it. Now, Square is another company similar to Roku in a different field. They are very advanced in all their payment systems. I like Square more than PayPal. Why? Because Square has more advanced technology. They are, in my opinion, they are developing technologies, and they are also in the cryptocurrency. They have some sort of platform which can trade cryptocurrency, can take cryptocurrency Bitcoin payments. That to me is very important also, even though I'm not a Bitcoin freak. So this is another one that can be a Roku during earnings. Just can put a lot of money in your pocket. So this is another one. I'm literally laying it down. This stock, given, and I'm a chart guy, but I also know the fundamentals. Back from my old days, I used to really study the fundamental research on the company, this and that. What really makes you money is mixing the fundamentals of the company, i.e., knowing the company, and mixing it with the charts. You understand that part, right? Yes, Anu?
What is it? Can you repeat?
Okay. You understand the part that fundamental research means you do all the research on a company, you understand what they do, what kind of markets they are doing, who their customers are. That's called fundamental research. All right?
Okay.
Yeah.
Yeah.
You mix in that research with technical charting, which is the charts, and you have a powerful combination. You understand what I'm saying?
Yeah.
Exactly. So looking at this chart here, I can place a solid bet that they're going to have pretty solid earnings, and the stock will hit $86, and it is right now at 76. The stock goes up $10, your options will be up almost 300%. If
Okay.
the stock does fall, look at this line here. This is called megaphones. This line is at 67. So if the stock falls to 67 from 76, it's going to lose about 9 points. It is again becomes a solid buy. I don't think personally it's going to happen, because based on what I'm seeing here, it has a good shot to get to the upper end of this channel. See this? That is 86. So this is another company that could possibly pull a Roku type of move on earnings, which was humongous. And if you notice this is what you have to train your eyes on. Look at See? This is called pattern recognition. To look at something and try to understand what the pattern looks like without knowing anything about the company. Did you understand what I just said?
Yes.
Exactly. So look at this pattern. Oops, sorry. Does this look like a pattern possibly a stock can do? Just, asking you. I mean, yes.
Mm, yeah.
Is this possible?
I don't know. Will it go straight to 100?
It's a weekly chart. So
Okay.
all I'm saying is if the earnings are good, the stock will hit close to 90. That's all I'm saying. And if it hits close
Okay.
to 90, then this level comes into play. And will it go to 100 in one day? No. But can it happen over 2 weeks, 3 weeks? Yes,
Yes. Yeah.
absolutely. Didn't Roku do that? Didn't
Yeah.
other stocks do
Yeah.
that?
Yeah.
Trade desk, you could have put $400 and taken $4,000 out.
Yeah.
Look at this. These are real companies. These are some of the best, finest technology companies out there that most people don't know about. Well, Square people know. Trade desk, no one knows. I told you guys to buy it. Look at Trade desk. See? This is known as a W formation, a dragon bullish. It just broke out, and at this point, the stock is going to go to 220. And I drew this chart a while ago. So you have to start focusing on the charts, which will help you with your emotional balance. That's what I'm saying. Everyone goes through emotions. Everybody. But you have to keep a little stable balance on that. Because of your emotions, you have left so many huge trades on the table because you've been too scared. And that's a fact, right?
Yes.
Exactly. I'm not saying like you need to dive into everything, but all I'm saying is start focusing on the charts. Okay. Any other stock that comes to mind you want me to look at?
Mm,
Tell me. I mean, I'm sure.
and yeah, the Nvda, it was like rising and suddenly it started dropping. Don't know
It,
what happened.
when did it drop? It started rising
Like,
since after earnings. It started to, Nvidia is right now here. Nvidia, in my opinion, Nvidia's low was right after earnings, and that was when we said buy, buy, buy. Remember 131, 132? So Nvidia went to 164, and basically right now is at 157. There's absolutely nothing wrong with this stock. This is a daily chart. Nvidia
okay.
Nvidia is a very powerful stock, but it's also a stock that moves around $3, $4, no problem, right? So Nvidia stock is going to go to 174. See that? See this line here?
Yeah.
Yes, it's going to go there. Why? Simple reason. Nvidia's chips. You use computers. Are you in IT?
No, not now.
But you were in IT? Is your career on information technology?
Y- yes.
Okay, you understand GPUs?
What GPUs?
Yeah,
No, I don't know.
of course you know. Graphic processing units. Okay?
No.
Oh, you know what a CPU is?
Yeah.
Exactly. GPU is for graphics, CPU is for computers. So basically,
Okay.
it's a processor that drives the graphics. Nvidia is big in their biggest business is graphics cards for high resolution videos. Okay, so
Okay.
what is the most highest resolution video used for? What sector?
High resolution. Okay.
Gaming, gaming,
Yeah. Yeah.
which is a multi billion dollar business. These gamers are like
Yes.
nuts, right? So
Yes.
Nvidia's processors drive the gaming business. The gaming business is going gangbusters. I'm not a
Okay.
gamer. Thank God my son's not a gamer. He'd drive me crazy. Since he was little, he never really was. He was like a little bit into video games. You know how kids become video gamers and they become like obsessed, like drug addicts. They're like game addicts, right? So,
Yes.
and then the big boys make millions of dollars playing games, and this is so Nvidia's graphics chips. One of their biggest businesses, is basically making high processor GPU.
Okay. Okay.
So yes, their stock will go higher. The
Okay.
other part of Nvidia is into autonomous driving, like driverless cars, which
Yeah.
is really picking up speed. Their chip, they're in that, and they're also big in AI, artificial intelligence.
Okay.
Exactly. So putting it together, I feel that the gaming business is so strong that they will, at least from a technical standpoint, the stock is good. It's at 150, 160. The stock can hit 175. That's very nice. That's almost $16, right?
Yes.
Exactly. Now, it is a volatile stock. On certain days when tech stocks are down, it will be down, but I'm giving you the bigger picture of where it can go.
Okay.
Yeah, 175. Uh, Mike, Trina, you guys have no passion for any stocks? You want to throw out a name you want me to look at?
Did you look at Etsy?
Which one?
Etsy?
Yes, of course. I haven't seen that lately. I bet you the stock. Oh, it's going higher. No, I'm serious. I mean, you look at this chart here. That's powerful. So this stock went nuts. I guess. Well, $3 on Etsy is good because Etsy is also quite volatile stock. Okay, let me draw out. This is a naked chart of Etsy. In other words, it doesn't have any lines or any structure on it. So let's do it up. Okay, let's dress this baby up. Let's dress Etsy up.
And earnings is tomorrow after
No kidding. I have
close.
earnings list here. Hold on. I don't see Etsy earnings tomorrow. Are you sure? Tomorrow's March 4th?
Yeah.
No. Oh my God, I'm such an idiot. Thank you, Trina, for putting me. Tomorrow is. I printed out the wrong earnings report and marked all these companies. Oh my God, I'm definitely playing Etsy earnings. Buying one call of Etsy, good enough, right? You can make double your money. Okay, so Etsy, let's do this. Thank you, Trina. I printed out the sheet for thinking I'm going to discuss it with my members, and I'm looking at it here. These are the March 4th to March 7th sheet, So thanks for correcting me, Trina. I am a moron. Hold on. All right. This is a good looking picture. I like it. So let's draw this out. Anu, check this out too, okay? Because this one's going to go higher, in my opinion, because Etsy's earnings last quarter was also very strong, right, Trina?
Yep.
Exactly. There you go. I like that confidence. That's what I want to hear. So let's do this. There we go. So here's your channel. This is how we draw charts. Here's your downtrend line. 1 second. It broke above the downtrend line with a very bullish green candle. And Anu, contact me tomorrow on Twitter or in the chat room. I'm going to give you 2 free lessons on this whole technical stuff so you build up your confidence. After that, you can sign up. Fair enough?
Yeah. Okay.
Yes, do that because I'm telling you. I love teaching, because I know you want to, be in there. You just want to be more mentally strong. I'm going to give you 2 powerful lessons. After that, you sign up for the ACS sessions, and then you see the difference it makes on the trades that you do. So, all right. So make sure you contact me tomorrow. All right, on the thing.
Okay.
All right.
Okay.
Sounds good. So here's your downtrend line. The downtrend line was at 50, and I'm drawing a very simple chart here at 54.64. The stock broke out like a monster. And thanks for bringing us to our attention, Trina. I mean that. And it's not for me. It's for everybody who's going to be listening to this. These 2 new members, Anu and Trina, have just made you guys a lot of money because they both are bringing out stocks which are on major technical breakouts. So you guys should thank them. And I mean other members who are going to be listening to this. Seriously. It's time to wake up. So here's your high, which is 58.41. This is the wide trading range going back to last November. This is a very defined technical chart, so it's easy to explain. 58.41, 41.97, 42, and 58. All right? That's 16 points, ladies. Right? 16 points. Am I right?
Correct.
Okay. In simple English, if the stock delivers, which I think it will, given all the technicals that I see, and I'm going to go through the internals. Remember, this is called the external chart. Here are the internals, the McLaren oscillator and the slow stochastics. Anyway, so bottom line is that both of them are trending higher, and that is a good sign on heavy volume on Friday. Got to look at these things. So this is the internals are strong. The heartbeat is strong. So 16 points. If it breaks over 58 and it goes up 16 points, because that's the range. So 16 points from 58 brings it to 74. Right, Trina? The stock could be destined for 74. Yep. So how do we measure 74? I can't make this up. This is why technicals are so powerful, so important. What is this number? 74? Almost? Magic, huh? This is almost like pulling a rabbit out of the hat. Is this magic or what? Look, where is this number? Close to 74. And I didn't do any funky stuff. I simply drew some lines, and this is what I do with my charts, and any of you can do it. 74. First level of contact is the upper channel, which is 64. That's good enough for a nice fat trade. Yes or no? Right?
Yes.
There you go. I actually, because I trade at Etsy, I mean, there's so many stocks, like so many retail stocks, like breaking out. It's tough to I'm like, I'm not going to buy all that stuff, So this is a good looking chart. Thanks for bringing it to attention. This was nice. I didn't realize this. Look at that volume. Anu, you understand this volume part? Just when the candle is that big, that means a lot of money went in.
Yeah.
Exactly. Off this channel. Now, I like this channel because it touches here, here, and it bounced off here. Upper end of this channel is, 64. I'll take 64. I don't want to be greedy. Yeah, it might go to 74. Maybe it doesn't happen in one day, but God knows, Etsy doesn't have exposure to China. Etsy's business is U.S. And I think they're expanding internationally. Are they, Trina?
I'm not sure.
I'm not sure. Yeah, I don't know either. So I can't really explain. But so in other words, because they're not exposed to China, they don't have to worry about tariffs and all that crap. Even though they have to, I think they make some of the stuff there, or no? Some of their customers?
I think probably some of the product.
Some of the product. But a lot of Etsy stuff is like handmade, right?
Yes.
Yeah, because I don't really use Etsy, so I didn't know. So they're handmade, so it doesn't matter. They know. But anyway, I don't think China trade war, which is now coming to an end, thank God, is not going to have a huge impact on the thing. So this is a good looking chart. Okay, one more, and we're going to wrap up. Any more that comes to mind, or we'll just wrap up here?
CVNA, Carvana.
Man, you're pulling some good stocks here. I like Carvana, right? Yeah.
Yeah.
This is a very new age company. For people who don't know Carvana, it's kind of like a strange sounding name. Carvana is basically, these guys are the cutting edge of buying how to buy vehicles, right? And they have they basically are automating the whole process of buying cars, correct?
Correct. Yep.
Right. So Carvana is from a I like stocks which are coming off bases. This is a base. See, 28 is a base. 32 is a base. Upper end of the base is 40. For stocks like this moving up $2, you get 40, 50, 60% on your options. If the stock gets back to its former glory, where it basically, not former glory here, but here where it just sold off like a monster, that's 55. I like the stock. I know
their earnings is after hours on Wednesday.
Okay, sounds good. I'll certainly mark it. All members who are listening to this, please feel free to mention a few stocks that you like for earnings. I'll take a look at them. If they're within my sphere of expertise, I'll go out there and put out some charts, and you guys can run with it. If Carvana delivers, the stock is good to go to 40. That's $2. That's nothing. It can go. Do I think it'll jump up $12? I don't know. But the stock can move big on earnings. Has done that before, right? It has. I don't know, $12 or not, but you can move $5, $6, $7. That's a lot for a $38 stock. So far, it's a good looking chart. Why? Because I can see a pattern, and I want you guys to see a pattern. Here's the pattern. First level of engagement, resistance, and then 50. Now, internals are looking good. Let me put the MACD in there. Sorry. Studies. And the MACD, it gives you an idea. Oh, I like it. Look at that. The MACD just turned green 4 days ago. And this is the stuff, Anu, that we teach on advanced coaching sessions, how to not just look at a chart, but you can feel the health of that stock, whether or not it's a good chance to go higher or not, by looking at the internals, which is inside the body of that chart, what is going on. Do you understand?
Yeah.
Exactly. So this is, this is how we do it. So this is good. This is 1, 2, 3, 4. And if this goes up here, these histograms, that means the stock, we're literally going to go into the mid 40s. It's good. It's looking good. Now, saying all that, if it doesn't deliver, then the stock has a fair shot to basically hit the lower end of the scale, which is between 28 and 30 again. But looking at least technically speaking, it's got a fair shot to move up a little bit more. And then if it moves up, let's say $2 or whatever, there was nice volume on Friday that we like. Look at that volume. There was a lot of volume here. That was the real buyers who came in. These were some hedge fund went in hard. Oh my God, look at this volume. It's 8.5 million shares. So somebody bought 8.5 million shares. Not a guy, some sort of fund. That's a lot. That's something that just sends off a trigger like, whoop, they know something. They know something. You understand what I'm saying? So if we do this, if we draw the lines here, because nobody buys 8.5 million shares just like that. That's serious money. So I'm drawing the channel. Do you guys understand what I just said? Look at this. When you see something like this, it just automatically raises a green flag. Not a red flag, a green flag that something big is about to happen. Either that or they're complete idiots, in which case it's a different story, but I doubt it. See? 50. See this channel? The stock was trading in this channel. Then it fell apart at the beginning of January. And now it's starting that move back up again. And I can draw this there. This channel's looking good. 1 second. Bingo. Oops. Let me try to. With technical analysis, you want the lines to be like really perfect. You don't want them to. There you go. So even if it slips and slides, moves down to 33, there's a good chance that buyers will come in at 33 or 34 and move the stock higher. First level of engagement over this line is 45, 44. There's going to be selling there. It's not going to be straight to 50. God knows, anything can happen these days. You've seen what stocks are doing. Certain stocks are doing. But I'll take 45. I'll take 45. If the stock just bumps up to 40, I'll be like, come on. Now, this might happen. Before Wednesday, the stock could break up over 40. And in which case, 45 comes into place right away. If the stock is resting at 45, it has on good numbers, it has a fair shot to go to 51. Do you understand what I'm saying? If it moves into the 45 range and sticks around here, before earnings, there's a good chance that the stock will go to 51. If it stays around here, perfect, because we don't want to overpay. We want to buy cheap prices. We all agree with me on that, right?
Yep.
There
Yes.
you go. All right. Perfect. Perfect. Listen, really enjoyed tonight's webinar. Thanks for the great questions, Anu. Contact me
Yeah.
tomorrow for the 2 free sessions. After that, you can sign up for the coaching session. You'll be ready to understand a lot of stuff. Good that you shared some of your thoughts, because you know what the problem with traders are? They never think about their thoughts. They're just like, this and that. At least you mentioned it. Other people will hear it. Hopefully they're encouraged by it. I think both of you brought out some great stocks that for us to look at. We looked at it technically. We gave it a little bit of fundamental basis, but we are, after all, technical traders. Earnings is a great way to grow your small or even big portfolio. You don't want to go too hard, too big, but a little bit. Look what happens. The trade desks, the ACIA, Acacia Research, just throwing out some names, Roku, and Huya. That's another company coming out in March, the ones that's doing really well. HUYA. So and China stocks are going through the roof right now, as we speak, overnight, with all the stuff going on. So China plays, I'm going to be showing some more China plays that we can trade. Okay. All right, guys, have a great evening. Thank you for all the questions. I hope this was helpful. This will be very helpful to everyone else. Mike, you get a good night's sleep, make some money, because trading is not a spectator sport. It is certainly not a spectator sport. You don't sit on the sidelines and say, oh, well, I'm going to do this. No, you got to be engaged in it. On that note, God bless you all. See you guys tomorrow. And let's have a great week.